Hi, I'm Mary, and welcome to Demeter Financial's Wednesday Wisdom. So, we've talked about how you're taxed, and now let's discuss ways to reduce your taxable income. Using a program such as TaxCut or TurboTax, working with a CPA or a company such as H&R or Liberty Tax can be beneficial if you're doing more than filing a simple 1040 form. Most young folks will be doing that, and you can, in fact, file for free on the irs.gov website. If you have a few extra items, maybe investment income, there are partners that work with the IRS. From the IRS website, you'll answer questions and they'll give you a list of companies you can use to file. But pay attention to whether you can also file your state return through that group, and if you can, if there is a fee, and how much is that. So let's get into deductions. These days, the majority of folks are likely to use the standard deduction of $12,400 per person for 2020. That is the benefit of using a program in that you can enter your deductions such as charitable contributions, cash and goods, your medical expenses, including mileage to and from the doctors, mortgage or home equity loan interest, student loan interest, and the program will calculate which deduction saves you more using the detailed deductions or standard. Understand that 1, the medical expenses are the costs above 7.5% of your income. And say hi to Tanner. So if you have $50,000 in taxable income and your medical expenses equal $8,550, then you really can only deduct $4,800 of medical expenses. And if the expenses are $3,750 or less, then the medical expenses aren't going to really help you. I would like to point out that there are things to pay attention to, like an unusual medical expense. I am gluten intolerant, and as such, I can deduct the difference in the cost of my gluten-free foods from standard foods. So if a loaf of bread costs $2.99 and my gluten-free bread costs $6.99, that is a $4 cost I can deduct. I can do this as a medically required diet. Eating gluten causes damage to my insides that could result in cancer. But again, what counts is anything over 7.5% of our income. So for now, state and local taxes and property tax deductions are capped at $10,000 if married, filing jointly, or $5,000 if filed separately or you're single. Other things you can write off are, as a teacher, educator expenses, health savings account contributions, IRA contributions, early withdrawal penalties, and alimony payments. If you're getting into that many deductions, I definitely recommend using a software program or a tax advisor to help you. So it's worth it to keep track of deductions, but understand that if all those deductions are less than $12,400, you're better off taking the standard deduction. So next week, we'll get into business deductions, good for your business, or if you have a side hustle, how you can offset the earnings there and hopefully stay out of a higher tax bracket as a result. Questions or comments? Hit the Contact Mary button below. And say goodbye, Tanner.